If you're trying to figure out what stocks are likely to do very well in 2025, giving you very strong returns and also a safe investment, then this is the video for you. We're going to talk about all the stocks that I think are likely to flourish and do very well in 2025 and give us a really nice return. Let's dive right in. So first and foremost, we're going to talk about a few different stocks, but I want you guys to understand that obviously, some stocks are more riskier than others, and I think Rigetti Computing is a very strong stock for this year and more so in 2026 and 2027. This is a stock that is poised to do very well because it's quantum computing. Now, in my opinion, there is going to be some risks, obviously, like any other stock, but when you look at Rigetti and you look at overall quantum computing, this year there could be some pretty stellar returns. Rigetti has already made some pretty good strides. So you can see in the last month, they're up 30%. Last 1 year is 754%. In my opinion, in the next year or two, there could be 3 or 4x return on Rigetti. This is something to really consider. When we go on the 4-hour chart, we can see all the way back, Rigetti really started gaining traction this previous October and November. Now, granted, right now is not the best time to have bought. Obviously, it would have been much better to have gotten in November, but since we can't do that, the next best thing we can do is dollar cost average, my 33-10 rule, which is what I explain to my students all the time in Discord and in my private and elite coaching, which will protect your account. This way, you can dollar cost average and you'll be able to add to your position. If you want to see a video on dollar cost averaging as well as my 33-10 rule in order to make your account safer and make more returns, comment below because I would love to make that video for you guys. But going back into this video, Rigetti, as we can see, has a lot of support and price action at 727. So I would like to get into Rigetti at 727. So what I would do is I would buy some shares at the current price and I would sell some put options down in the $9 range, maybe going out a month. And I would try to collect premium as long as I could, because then when I finally do get assigned, you add up all that premium and you deduct it off the price that you paid for the stock. So if I can get enough premium on the $9 puts or $9.50 puts and if the stock drops, I add to my position. Over time, I could average $10 or maybe even $9, depending on where the stock goes. But this is a great stock to get into, in my opinion, long term. Not the strongest, but definitely good. If you're having trouble understanding the reason why I'm giving you these stocks or the reason why I'm picking them or things that I'm talking about in the data, like price to sales, price to earnings, and you're looking at growing your portfolio and you want to get better, or maybe you're losing money and don't know where to begin with the stock market, I would love to help you guys. You can join the ranks of my students in the Discord, get my trade alerts, copy my trades, 2 live coaching calls a week during live trading hours to learn how to trade properly. You get over 6 hours of video on demand courses to learn how to trade start to finish. Whether you're beginner, intermediate, it doesn't matter. We also have boot camps and masterminds and one-on-one coaching, and I would love to help you grow your portfolio, and you can do so at any time. The link is in the information box below, the direct link to Discord to get started. I hope to see you guys very soon. It's what drives me every single day. I get to live the life I've always wanted to live. Right now, I'm in my theater, my brand new house. I get to spend all of my time with my kids, but I want to help you achieve the exact same thing. Another stock that should be talked about is Tesla. Now, Tesla is a pretty volatile stock with a lot of risk, and it can travel anywhere from $100 to $150 in either direction in as little as a week or two, or even a couple of days if the wrong news comes out. However, with the robots and robotaxi and the overall full self-driving of Tesla, I anticipate that this stock is still very likely, especially with robotaxi, once it becomes fully integrated and successful, that this stock will reach at least a 3x or a 4x in the coming 3 years or so. This is a stock that you should consider, but it's probably more of the long haul, and you need a bigger portfolio to trade it because you don't want to be more than 10% of your portfolio in any one stock. And you want to run my 33-10 rule, which gives you the opportunity to invest 3 separate times and still maintain a 10% or lower percentage of your portfolio in any one stock. In order to do that, you ultimately would need like a $600,000 to $1 million portfolio to essentially do it safely. But this is a stock that I would highly recommend adding. And even if you wanted to add leap options going out 2 years or even 1 year, that would still be pretty good on Tesla because I see there being a lot of growth in this stock in the next year or two, especially with the economy right now and inflation dropping and interest rates on the horizon. This is definitely a stock to look at. And if we look at the 4-hour chart, we can see that it's nowhere near its all-time high, which would be pushing 500. Right now it's in the threes. So there's still a 50% return looming on the horizon in the next 6 months to a year or so, right there alone. And I would like to sell put options down around 270, 280, 300, and do this in such a way where I'd collect premium over the course of a few months while adding shares so I can dollar cost average, because I would like to have an average cost of 300 or under, because this ultimately would be the best scenario for Tesla. But this is definitely a stock that I would consider looking at. And we can see it has a year to date of negative 12%, 1 year of 90%. And then we can see that it's struggled over the last 3 months, but over the last 6 months, it's done very well. And this month, it's greatly improved, as the entire stock market has. Another stock to consider, which is really strong, and it's also tracking Bitcoin. And because of the fact that Donald Trump has made Bitcoin, Ethereum, and overall cryptocurrency pretty much official, this is a great stock to buy. And I do not in any way, shape, or form see this stock being a bad performer in the next 3 to 5 years outside of an economic crash or downturn. We can see the all-time high for MicroStrategy going back to November is almost 600, and we're at 397. Again, this stock has the likelihood, as tariffs become more solidified and interest rate cuts happen, and there's more volume in the markets and things just get better over the coming year or two, or maybe even 3, MicroStrategy could easily push $500 to $700. And just going back to its all-time high, pushing $500, again, this would be a 25% return right there alone. So if you're investing enough money in these stocks, then ultimately you could have a pretty big return. If you're investing, let's say, into leap options, you could be getting 30, 40% on some of these stocks within a year. So a $20,000 investment turns into a $35,000 investment. A $100,000 investment could turn into $135,000. This is really how you grow your portfolio with good stocks. But looking at the stocks right now that are really good for this year overall, these are not specific to any month or any time. These are long-term holds for the year, ones that I'd want to just be in. MicroStrategy is another one. We can see that they're not doing very good company-wise, but they track and they have a treasury with Bitcoin. They have a lot of Bitcoin. 1 month, 27%, 3 month, 22%, 6 month, 17%. So an average 6 month of around 22. Year to date, 32, 1 year, 187. So this is a very good stock to get into. Again, I'd want to be selling put options in the 300 to 320 range to collect premium going a month out, adding some shares if the stock falls, dollar cost average. If I get a sign in the puts, that would lower the average even more. If not, I would just add up all of this premium from the puts to buy more shares and average my cost down. I really would like to have an average cost of in the mid threes would be good. And you can easily achieve this by selling puts every single month at 280 to 300, because over 6 months, this would give you enough premium to lower your cost on the shares drastically. For example, a $300 put going a month out is likely worth $500 to $800, which is going to give you a very big discount on the stock. This is going to be $8, $9 discount. So if you're doing this every single month, let's say for 6 months, well, then you've just lowered your cost by $40 or $50 on 100 shares. Consistently selling puts, dollar cost averaging, every time you see a dip, like the stock comes down a little bit, like say, here it comes down, buy. If it comes down, buy. Wait for it to continue to drop, consolidate, buy a ton down here. And if it goes back up, you buy some here. Dollar cost averaging doesn't mean buying the stocks only when it's at a low. It means buying the stocks over time, average up or down. This way you can have an average cost. I think an average cost at 300 to 350 is pretty stellar on MicroStrategy. Another stock that is poised to run in the coming years, which I would want to get into now, is Big Bear AI. Granted, similar to Rigetti, this stock wasn't doing so hot back in August at $1, but it hasn't run as much as Rigetti, and there's a little bit less risk because this tracks with Palantir and has an all-time high of $10. So right now, there is a 3x return that's potential on the horizon this year and into next year. This is very strong. We look at the previous highs, and all stocks typically return to their previous highs as long as they can turn things around or become more profitable, or if they're not profitable, actually becoming profitable. So there's these things to look at, but most stocks that reach a high like this pull back over time, work their way back to that high. So Big Bear going to $10 is very likely, especially if they can get their house in order. Now, this is not a very expensive stock, therefore it's not a huge risk as long as you keep it to 10% or less. Year to date, down 20%, 3 months, months down 61%, but 6 month overall is still up. And this week they're up, and this last month they're up, just like the stock market, but over the last year, still 100% from where it was before. There's a lot of support in the $2.50 to $3 range. So getting into Big Bear at $3.64 is not bad, just dollar cost average. If it drops into the mid to high twos or low threes, you'll want to dollar cost average. $1 billion on the market cap. Their financials shows almost 200 million, like 160 million. So if we were to divide this into 1 billion, we would be looking at about 6, which is pretty strong. Price to sales of 6 is pretty good. It shows that the stock is well worth its current price, and essentially the stock could double or triple. Anywhere between 12 and 18 is the norm as stocks grow into their valuation. So we could see Big Bear in the $10 to $12 range in the coming year or two. And this year it's likely, like I said, as long as the economy gets better. This is a stock you definitely don't want to miss out on because of how cheap it is and the potential of this stock. You definitely don't want to miss it. Another stock to look at, which in my opinion is one of the strongest stocks of the year, is Google. And it's getting a bad rep over the past couple of weeks because of the search engine results that Apple reported. But Google's not just a search engine. It's also Gemini AI, YouTube ad revenue, YouTube in general, AdSense. There's a lot of creators on YouTube. They also have Willow, which is their quantum computing. And going forward, Google has more of a foot in the door than even Rigetti or Big Bear or pretty much any of the other quantum computing stocks. Google is the king of quantum, in my opinion, especially with Willow. Google's been around a very long time and has a lot of money. So it's going to be very hard for anyone to compete with Google. We look at the last week, it's 5%, last month, 3%, but they're down year to date over the last year and over the last 6 months. And this is really because of the market and, of course, the lawsuit that's going on. They settle, get out of this lawsuit. Google will make its way back to its all-time high, which we can see was way up here at 209. So with that being said, there's a lot of potential upside to Google right now. And over the next year or two, there's potential a 2x return. And the next 3 to 5 years, a lot more than that. In my opinion, in 5 to 10 years from now, Google will be 10x where it is right now, especially with quantum. So if you're looking for an investment that's going to take a small amount of capital and turn it into a pretty decent size amount of capital in the coming years, could be 3 years, 4 years, 5 years, maybe a little sooner, but something that's going to definitely build you a nest egg, Google is potentially the best one because of quantum computing and because of Willow and because of their Gemini AI and how integrated they are and working with Meta and working with Microsoft. So this is a very strong player. They also have Google Nest, Google Home and security, and the Google Home works with pretty much a lot of other lighting fixtures and home security systems. And then of course you have YouTube and YouTube ad revenue and AdSense and Gemini and Willow. There is the search engine on top of all of that. So Google is very much integrated everywhere. And they also make phones and devices and hardware. So very strong stock, in my opinion, one of the best to look at if you want to have a high return over the coming years. And if any stock I could pick was going to make millionaires and was safe in the coming 3 to 5 or 10 years, Google would likely be one of them. Another stock to look at briefly, but we're not going to talk about it too much, but has potential in the coming years is Nike. In the next 1 to 3 years, Nike could explode. They've had some serious issues, but with tariff deals and a better economy and the world working into a better position since the last 4 years, we've been breaking out of all of this COVID rut that we're in, which has hurt a lot of companies. And I blame that a lot on the reason why Nike's where they're at. However, Nike, Foot Locker, and all of these companies that have struggled so much post-COVID, I believe in a better economic worldwide will do a much better job of garnering customers and profits. So as the economy gets better this year, next year, the year after, in the coming years, Nike could return to its all-time highs of $120, $130, which if we look back on the chart, we will see it was last year, $130 in February of 23, and in 2021, they reached $177. So essentially, there's a 2 or 3x on the table. There really is. If they can get back to making more money, more profits, grow, the economy is stronger. If we look at their market cap of $92 billion, and then we go look at financials, $92 billion divided by 47, it's a price to sales of 2. The average in the S&P 500 and the NASDAQ is around 16 to 18, which means essentially there is a 6 to 9x potential for Nike if they can get into a much better profitability and a much better stance with the economy. So when you look at the overall price to earnings, 20 is still pretty strong. Nike is definitely heavily undervalued. Nike, based on everything I've looked at, it's worth at least $80 or $90. I fully believe that this is going to be a great stock to invest into 1 to 2 years down the road or 3 years down the road, especially with the economy, interest rate cuts, and as far as inflation and the economy just getting better. Inflation is down year over year to 2.3%, lowest it's been since 2019. 1-year price target here is 73. Current price is 62. So there's still essentially like a 12 to 15% return already, but I think that's heavily undervalued. Nike's a really good investment long term, of course. Also, AMD has the potential, but there's a lot of risk here. But AMD essentially has a potential 2 to 3x return in the next 2 to 3 years, especially with these Middle East deals that they've picked up. And not only that, the PlayStation 6, and we're waiting on confirmation with Microsoft and Xbox if the new Xbox is going to be utilizing AMD as well. So AMD has a lot of potential future growth as far as AI, chips, hardware. And again, it's going to be completely dependent on tariffs getting, fixed and concrete data on that. As far as interest rate cuts, that's also going to help the world economy, and world trade will also help. But if all of that works itself out, considering the deals AMD has, this is another stock to consider looking at long term, and I would definitely add it. Another one, we cannot talk about any of this without bringing in NVIDIA. I know I've trashed on NVIDIA a bunch of times because the fact that for the past year and 3 months, 15 months now, NVIDIA has pretty much done nothing. In fact, it's lower than it was 15 months ago. There's not really a lot to be made unless you're a trader that gets in and out, runs the wheel strategy. Then it's the perfect stock, literally the perfect stock to run the wheel on, because you can sell puts going a month out. Right now at 110 at the stock drops, sell calls at 120. If it runs, you get it at 120, and you keep rinsing and repeating this. It's a great wheel stock right now because running the wheel, you want to be going down and up and down and up. And that's what NVIDIA is doing. It's the perfect stock for the wheel. But to make money long term and to make a lot of gains over the course of the years, this is still a good stock, and it has the potential to 2, 3, or even 4x in the next 2 to 3 years. Again, the same reasons we've talked about all of this video, which I'm not going to mention again: the economy, interest rate cuts, all of these things. But this is another stock that you'd want to have some exposure to, but you don't want to expose yourself to NVIDIA and AMD and Tesla and then just call it a day. If you're into AMD or NVIDIA, you have to pick one or the other, or a small position in both, and then you want to go over and look at something like Big Bear or Rigetti, and then you have to add Nike and something else. You can't just add all tech stocks. You have to diversify, which segues us into another stock that's also great, similar to Nike, that I'd want to add to my portfolio, and this is SoFi. SoFi, without a doubt, at a 4.7 price to sales, has the potential to go up to around 14 to 18, which is where most finance stocks are. Great stock. But if we look at Bank of America and we see that the price to sales is 13, it's stellar. Market cap $334 billion, and if we divide that by 198, 334 divided by 198, so we have $334 billion divided by 198 billion. So we're going to do 334 divided by 198, gives us a price to sales of 1.68. Their 1.68, SoFi is a 4. So essentially, Bank of America's price to sales is twice as good. And you look at their shares float at 749. Then you go over to SoFi, and the shares float is roughly 1. So it's 1/7. But their market cap is also a lot lower. 7 times 15 is 105 billion, which is a third. So essentially, the price should be about a third of Bank of America. And you figure that would be 39, which is exactly where it is. So it's priced in nicely with Bank of America, but essentially Bank of America has the potential to go to $80, $90, right up where Citibank is, and SoFi has a 3x to 4x potential to be around 40, just like Bank of America in the coming few years. So SoFi and Bank of America, both really good stocks. In my opinion, there's a little bit more edge on SoFi because it's a fintech and because it's more into AI and tech than Bank of America would be. And the technology that SoFi uses is definitely better, and they're more modern. Another stock you don't want to miss out on is Grab Holdings. 20 billion market cap. Price to earnings is not so good, but when you take their financials, 2.92 billion, and you go into their market cap of 20 billion, you essentially have yourself a price to sales of 7, which is really good. They've had some great growth. If we look here, they're green everywhere. 1 year, 40%, year to date, 7%, 6 months, 7.6%, 3 month, 1.61, last month is 26, and last week is 4.33. This is a stock that I currently hold a lot of, and it is a great stock. You definitely, in my opinion, want to add some grab to your portfolio. It's not the only one. I also believe Robinhood and HIMS are very strong stocks. And Robinhood is another one that's great. We look at priced earnings 35, market cap is 53. Then we look at the financials. We can see that they have a total revenue of 3.28. We divide that into 53, and it's going to give us around 15 or 16 price to sales. So they're right where they should be, but there's a lot of growth here because they're a brokerage, a lot of people trading, and they have made a lot of advancements in the field of trading, and they've made a lot of advancements. Their mobile app is great. Their desktop app is also great. They have the potential to eventually reach $100 or more, especially with adding more products and more services, which they have continually been doing. Looking specifically at HIMS, we can see that this stock has risen a lot. I told you guys this was a stock to buy when it was $10 last year. The stock has made a huge move over the past 6 to 8 months. Market cap of $13 billion. And we look at their financials, 1.78 on their total revenue, again, giving them a price to sales of roughly 6, which means that this stock potentially could 3x in the next year or two. And it likely will keep rising because they're using AI to pair doctors and physicians and customers together. And using AI to do this is very similar to what everybody's doing right now, AI. And this is a very strong company, and their growth has been good. They've beaten 3 out of the last 4 earnings, and they barely missed on the February 2025 earnings. So a very strong company. Previous all-time high, though, was $72. They're reaching that high again right now. I'd want to try to get into this a little bit cheaper. The same with Robinhood. I'd want to sell put options and bide my time to get in just a little bit cheaper, dollar cost average. And you want to do this the safe way. And this is what I teach my students in Discord. If you guys want to learn how to get into these stocks and how to execute trades and lower your average cost, and you want to grow your portfolio, whether you're new to the market, losing money, or maybe you want to retire, you guys could join my Discord, my coaching, and my coaching calls, copy my trades, and join the ranks of my students that are generating profits every single week. And you could do so. The link is in the information box below. It's a direct link. Just click it and you'll be able to get started to join the Discord. Last stock I want to talk about is Intel. This is another company that is poised to do well under Trump and under a much better world trade. And if the trade tariffs and the issues with the trade deficit and these different deals that we're trying to get underway happen and the interest rates get cut and the economy gets better and keeps going in that direction, it's good for Intel. It's also an American company opening up more factories in the States and producing all of their chips here in the States. It's unlikely the government would let this company go under anyway. And so that's one thing to think about that's a positive. Another thing is it's completely undervalued at this point. And so this is actually one of the best plays with a market cap of 94 billion. And then we look at their trailing 12 month of 54, price to sales of 2, and a price to sales of 2 in the tech industry is huge. When we go and look at NVIDIA's price to sales, they have a market cap of 3.29 trillion, and we're going to divide that by 130 billion. So if we were to do, there we go, 3.2 trillion divided by 130 billion, 24. So NVIDIA has a price to sales of 24, which is average. Right where it should be. A little higher, but right where it should be. So Intel has a lot lower price to sales. 94 billion, like I said, divided by trailing 12 month of 53. Less than 2. So if they were to go up to where NVIDIA was, even the 20, that's a 10x return. Intel should be, with the right profits, the right leadership, and the economy getting better, interest rate cuts, Intel could go to $200, and that is a 10x return. Meaning if you put in 100 grand, you're a millionaire. If you put in 20 grand, you have $250,000 almost. So like I said, guys, Intel, a great stock to add to your portfolio, as the other stocks I discussed in this video, all very strong for high returns, as long as we get interest rate cuts and the economy gets better, and these trade tariffs and these trade deals come through. These are the stocks that I'm currently looking at. These are the stocks I would definitely recommend getting into. Make sure to keep the 33-10 rule in your mind so you don't go more than 10%. And if you guys are looking to join the ranks of my students and understand trading better, maybe you're looking to get better or you're losing money, you guys can join my Discord, my private coaching, my coaching calls twice a week, and you can copy my trades and get trade alerts and be a part of a community. The link's in the information box below. I look forward to seeing you on the next video and in the Discord soon. Take care, fam.